Hey everyone, it's the Cognitive Trader here. In this video, we're going to go over what is a candlestick from the Candlestick Trading Bible book. So, what is a candlestick? Japanese candlesticks are formed using the open, high, low, and close of the chosen time frame. If the close is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. Bullish candlesticks are always displayed as white candlesticks. The most trading platform use white color to refer to the bullish candlesticks. But the color really doesn't matter, and you can use whatever color you like. The most important thing is that the open price and the close price. If the close is below the open, we can say that the candlestick is bearish, which indicates that the market is falling in this session. Bearish candles are always displayed as black candlesticks, but this is not a rule. You can find different colors used to differentiate between bullish and bearish candlesticks. The filled part of the candlestick is called the real body, and the thin lines poking above and below the body are called shadows. The top of the upper shadow is the high, and the bottom of the lower shadow is the low. Candlesticks have different body sizes. Long versus short. Long bodies refer to strong buying or selling pressure. If there is a candlestick in which the close is above the open with a long body, this indicates that buyers are stronger and they are taking control of the market during this period of time. Conversely, if there is a bearish candlestick in which the open is above the close with the long body, this means that the selling pressure controls the market during this chosen time frame. Short and small bodies indicate a little buying or selling activity. Candlestick shadows, tails. The upper and lower shadows give us important information about the trading session. Upper shadows signify the session high, and lower shadows signify the session low. Candlesticks with long shadows show that the trading action occurred well past the open and the close. Japanese candlesticks with short shadows indicates that most of the trading action was confined near the open and the close. If a candlestick has a longer upper shadow and short lower shadow, this means that the buyers flex their muscles and bid price higher. But for one reason or another, sellers came in and drove price back down to end the session back near its open price. If a Japanese candlestick has a long lower shadow and short upper shadow, this means that sellers flash their washboard abs and force price lower. But for one reason or another, buyers came in and drove prices back up to end the session back near its open price. Candlestick patterns. Candlestick patterns are one of the most powerful trading concepts. They are simply easy to identify and very profitable setups. Our research has confirmed that candlestick patterns have a high predictive value and can produce positive results. I personally trade candlestick patterns for more than 20 years. I can't really switch to another method because I tried thousands of strategies and trading methods with no results. I'm not going to introduce you to the Holy Grail, this trading system works, but be prepared to lose some trades. Losing is a part of the game, and if you're looking for a 100% winning system, I highly recommend you to stop trading and go look for another business. Candlestick patterns are the language of the market. Imagine you are living in a foreign country and you don't speak the language. How could you live if you can't even say a word? It's tough, right? The same thing when it comes to trading. If you know how to read candlestick patterns the right way, you will be able to understand what these patterns tell you about the market dynamics and the trader's behavior. This skill will help you better enter and exit the market in the right time. In other words, this will help you act differently in the market and make money following the smart guy's footprints. The candlestick patterns that I'm going to show you here are the most important patterns that you will find in the market. In this chapter, I'm not going to show you how to trade them because this will be explained in details in the next chapters. What I want you to focus on is the anatomy of the pattern and the psychology behind its formation, because it will help you get the skill of identifying easily any pattern you find in the market and understand what it tells you to do next. If you can get this skill, you will be ready to understand and master the trading strategies and tactics that I'm going to teach you in the next chapters.